This is Rod Kusin and Spooman with risk for March the 8th. It's Friday, day after rollover, and we are going to place some of our premier indicators on the premium to help you to see how the indicators can be useful in reading the premium. Ultimately, reading the raw premium data is your objective. If you can learn to do that, you won't need an indicator, and you will make some very astute decisions. But we've thrown some indicators on here in order to assist you in being able to read the premium more effectively. Now, the bars on the chart, just to review, we're using 20-second bars on the premium as well as on the ES. And the indicators that we have also placed on the premium have slightly different settings that enable us to get a little bigger picture of what's happening. The times on the chart, just to review, are always on Central Standard Time. So if you're trying to duplicate this somehow, keep in mind we're in Central Time. All right. We've already established our thresholds for the premium. The yellow line represents our upper threshold at about -5.24 and our lower threshold at -6.37. We won't go into a discussion of how we arrived at that, but that's where we're placing them at the moment. Now, the Spoos dropped off and basically filled the overnight gap before they began to rally up. Let's concentrate on just looking at the indicator for a moment. Now, all three of these indicators had a negative slope pretty much right out of the gate. And as a result of that, okay, shorting this market became fairly simple by just following the slope of the indicator. The indicator is reading the premium. All right. So right about here is where the slope of the slowest indicator began to change. Now, as it was starting to move up, the faster indicator was sloping down. So we really didn't get any kind of an agreement until right in here, right at this low. Now, was there some reason to execute a trade at this point in time based upon the raw data of the premium? Possibly. Possibly. Now, the reason we say that that's possibly is if you look very closely at this bar on the Spoos compared to this bar on the premium, this bar on the premium is divergent, okay? It is divergent compared to the previous low on the premium. But it is also quite a ways below the threshold line. If a single bar is considerably below the threshold line, we will generally not take that as a divergence. It's too low. The low of that bar, -6.68. This one was -6.67. Okay, so it's only a 1/100th of a point higher, but our threshold is much higher than that. So that's why I would say possibly. Nevertheless, we did get some movement back up. That was tradable. Now, the next thing that happens, which is very interesting, is this bar on the premium, on the premium and then on the Spoos. you'll notice that this is a higher high on the premium. It's higher than any other premium bar since we began to chart it. It is also what we refer to as a naked bar. That means that when that bar was formed, the bar corresponding to the premium was not a lower high, it was a higher high. Pivots take place when there is divergence on the premium, but there is no divergence here. This is a higher high on the premium, as well as a higher high on the Spoos. And since there were no other equal highs, this becomes what we call a naked bar, which means that it is predictive. It is predictive of where we expect the price to return. Okay? So if we had not been in a long trade off of this low, we're now going to be looking for an opportunity to get in. This is a predictive bar. What we want to see now is, if possible, some additional kind of setup along with divergence at the point of the pivot. Let's look at what we see happening with the premium itself. We're going to compare this low to this low to this low. We're at a lower low on the Spoos, a higher low on the premium, and therefore we have a divergence here. Our indicators at this point in time, however, are not fully in agreement. We've got a little bit of a negative slope here taking place. The other two are in agreement. That may be sufficient for some traders to get in. But what we don't see happening, other than the fact that this is a new high on the premium, there's no other little setup going on. All right, if you look at the highs of the premium here, we're not going up, we're still dropping. The lows of the premium are still dropping. So this may not really be as good of an entry as we would like. What we want to see happening just before the pivot is the highs of the premium starting to go up. Now, let's just look at it right here. This bar on the premium compared to this bar on the Spoos, this is a higher premium bar. That's a little bit of a heads up. We may be ready to change direction. But now, as we look at the market drops off, but what's happening to these highs? The high of the premium bars right in here are starting to go up. Okay, these are starting to go up. That's a real good indication that we're right at a pivot point. We've got a lower low on the Spoos. Highs of the premium are beginning to slope up, and the low of the premium bar here is still higher and very, very close to our threshold. Our threshold has maybe a 5/100ths margin of error. So as long as we're reasonably close, that will be good enough for us to execute. So we had good divergence on the lows, all right? Okay, nice divergence here. Okay. Now, what we also see happen, all right, right in here, look at our indicators. They're all sloping up. Now, they don't start to slope up until right about here, but that's still very, very close to the low. The market comes back down and checks the low again here. But this low is still considerably higher than the threshold. And the very next bar on the premium is also divergent, negative 617 as opposed to negative 608. Equal lows, divergence on the premium. So if you hadn't gotten in here, another opportunity exists right here. And you also have a positive slope taking place on the indicators. Entering the trade at this point in time makes good sense. The indicators agree, reading the raw data, the premium agrees, and furthermore, you've got a target. Your initial target is up here at 1541. So with that thought in mind, since 41 is your target, entering here at around 38 if need be gives you at least a 3-point move that you can pretty well take to the bank. Let's continue analyzing what takes place after we reach that threshold. When we do, we get another new high on the premium. Higher high, higher high, higher high. Market should continue to move north, higher than 42. Is there anything that's happening, however, that tells us that we need to be cautious about this move? The answer to that question is yes. When the market sort of went sideways here, we got a lower low on the premium right here, and it was a naked bar. That low is naked. It means one of two things. And we repeat this rule time and time again. Either the premium is going lower or the Spoos are going lower, or both. Now that isn't meant to be ambiguous. That's a hard and fast rule that we follow to help us to trade conservatively. So as the market moved up, we had reason, based on this bar of the premium right here, that the market could return to a price associated with that bar. So if we're in a long trade and we've pulled out a good profit on this, we better tighten our stop. I would tighten my stop to just below that level if I'm going to hold this trade. I have reason to expect that we'll go higher, but that bar says we may come back, and I just don't know when that's going to happen. So I want to be very cautious about how I manage my money on this trade due to this information. Let's move forward and see if anything new becomes available to us. And we do. We measure the premium here. It was negative 625. We're going to measure it here. Negative 624. And over here, negative 637. All right? What does all of that mean? as we said, either the premium is going lower or the Spoos are going lower or both. At this point in time, the premium said we could return to a price of 1538.75. If the premium goes lower at a higher price, at that point, we're going to recalculate our expectations. So on this bar, negative 641, all that the premium is telling us is that we will likely drop below 1540. It isn't saying that we're going to drop back to 38.75. It's just saying we should likely go below 1540. So depending on where my entry is, that can tell you a lot about where to put a stop. And if, as it happens here, the very next bars drop lower, and then I get a divergence, I'm no longer concerned. So let's pull this into the center of the screen so you can see what we're saying. All right, that low on the premium, lower low, or pardon me, no, actually it wasn't a lower low. This was negative 6.4, but this low over here was a lower low. Market should drop a little bit as it does, and when it did, on this bar, right there, we were right into our threshold level at a lower price on the Spoos. That's your divergence, and up the market goes again. That's your target for your next rally up, and as you can see, that succeeds. So if you were in a trade, hold it, manage it, watch your stops, read the premium, and furthermore, look at the indicator here. So right in here, we've got a nice divergence on the indicator. Everything is positive, and we're moving back up. Now, when you look at the indicators over here and you saw that they were moving down, would you short the market? Some traders might. But until we have good reason to believe that, the market is really changing direction, we may be trading against the trend. Now, with this target here of 38.75 as a possibility at least, and this high being divergent at least on the indicator here, there's a significant divergence here. Expecting that the market is going to drop wasn't that wasn't a wrong expectation. So some may have said, why not? Why not short the market? And no particular reason, except I'm not going to hold that trade for very long because A, I've got reason to expect that the market's going to come rallying back, and I don't know whether that threshold is going to get met, but it might. In this particular case, we see that it didn't. So had you shorted this, we probably wouldn't short it for very long. As soon as we could see that there was really evidence that this is divergent, and that first situation happens right in here, all right, this low compared to this low, there's a divergence there. The indicators are beginning to slope up. All of them are sloping up right in here. Yeah. No way to know whether this is going to go lower. But once we have this new low on the premium here, now we have a very clear picture of what's about to happen. Market should drop, and it does. Then it becomes divergent, and back up we go. All bets are off because we had a lower low on the premium. So this line is no longer in play. Market rallies up, comes up to a new high. Now what happens? We look at this high on the premium and we look at this high. There's no dot here, okay? There's no dot. If there was, it would indicate that this is a higher high, but it's not. Now, these are obviously lower highs, but why do we have dots? We'll explain that in a minute. We can read this, negative 466, negative 476. It's definitely lower. Here's our first indication that something isn't right here. We may be losing strength. This market could be getting ready to drop to some degree. Is there anything on the premium that says where we're going to drop to? Okay. Not just yet. However, as we were moving up, look at these lows on the premium right in here. Okay. We've got lower lows on the premium, at least right at this particular time. Negative 604, negative 601, higher low. So we're safe there. But this is a lower high compared to this, but a higher high on the Spoos. If this is going to continue to move higher, the premium needs to move with it. We need to see higher highs on the premium to expect that the market will continue to rally up. And we don't have it right here. So if we're in a long trade, now's the time to really start to tighten your stops. Something is liable to turn here. But we don't have a clear indication just yet that the market's going to drop. Now, this didn't have a dot above it, although it was a lower high. But now we've got dots, and they're also lower highs. What's the reason for that? Well, we've set up this indicator to refresh itself on a regular basis. The indicator here is flexible, all right? Oop, that's a horizontal line. Let's get the indicator here. We tell the indicator when to start tracking the highs and the lows. And in this case, we're telling it after 60 bars, let's start over again. Because we may not be getting any new highs, we may not be getting any new lows, but we want to find out whether in the short run we're getting new highs or new lows on the premium. So this number we can change, and we do change periodically during the day just to help us to see what's going on. If we want to just get the big picture, we set this up to a much larger number. Okay, so for example, these highs here, this was based upon 300 bars. After 300 bars, we start to chart it again. So for example, if I set this to 400 bars, it's real clear, that was the highest bar that we had. Nothing else has been higher. So if you want to get the big picture and only the big picture, just set it to a higher number. If you want to get a shorter term picture of what's going on, then yeah, go ahead and just, put in a new number or restart it at a particular time. For example, we could say, all right, we know where that is. That's a new high. But I want to see if we're going higher, let's just say from this low. And so I say, all right, this is, say, 954. And I'll just go in here, restart it, 954, Don't really need to reset the bars unless I want a different reset on it. And there you have it. Okay. So we had higher highs again here, but not as high as it was here. And now we see, we're not getting any higher highs. So this move up is not being confirmed. Is a move down being confirmed? Are we getting lower lows on the premium? Because if we are, that could indicate that, yeah, this thing is going to pivot. Let's look. Now, we were resetting the lows, starting actually back here. I'm not exactly sure where this restarted, but let's just say, all right. Yeah, we'll restart it right in here at 1010. Okay, we'll restart the lows at 1010 just to show you what we're talking about. Right, and keeping in mind this is now resetting every 60 bars. Maybe let's change that too. Let's give this a little bit more room. Let's go to 300. Okay. So every time we get a new low, it's going to tell us that. And what is happening? Market has moved higher. Premium is not confirming. We're getting new lows on the premium. What should that tell us? That should tell us this is getting ready to pivot. This is going to start moving down. Can we tell how far down it's going to move? No. Not with the premium, not with this data. Not yet. Now, we could have said, oh, we expect it to go back to here because we had a new low on the premium. Well, at that moment, yes, you could have said that. But a few bars later, we got a lower low on the premium, and that revises our expectation. Then we get another new low over here, which is at a much higher price. That changes our expectation as well. The premium is going down, but there's nothing here to tell us how far down it's liable to go. There's no target. All we know is that we're running out of steam, and this thing is getting ready to short. So what might you do? All right, you don't know where this is liable to go to, but what do we see on the indicators? We moved up to this high on the indicator that's in, we'll just call this subgraph 3. It's actually subgraph 4, but we'll call it 3. We moved up a little higher. We got a new high here, and we've got a pretty good sized divergence here. This high compared to this high, well, this high compared to that high. That's divergent. This is likely going to be coming down. And on the next bar on the Spoos, we have a slightly lower high here by a tick. The next bar hasn't quite made it to the threshold line. Should we short this? Some people might. Some people might short it right there based on that information. I, on the other hand, want to see that the high of the bar is below the threshold line or very close to it, and that bar really isn't. It's close, all right, but it's not meeting my definition per se. So I may feel that really, I know I can see what the indicator is doing, but the raw read of the premium tells me a little different. We should go back up and test that high, might even go a little higher. Let's see what happens. Okay, there it is. Now you see what's happening? We're at, is this an equal high, 43.25? Yeah, this is one tick higher. And now that high of that bar is very close to the threshold line, within my margin of error. Now I'm going to short it. Why? Well, look at what's happening to the indicators. Whoa, Indicators are going down here. Down, 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 down. They're below the zero line as well. Yeah, that's my short. Now, if you look at this indicator, this is moving up. I know that. And that might cause some to say, well, wait a minute here. Why don't I just wait until the slope of the indicator is moving down? Yeah, you could do that. But that's the problem with indicators. The indicator, the indicator is kind of sloping up here. It's below the zero line. It's going to slope down, and it eventually does, right in here. All right. But I've already lost a tick if I waited. The raw premium data was enough for me to know that's coming down. Slope of the premium, lower lows. No strength on the move up. This is moving down right there. What happens? Oh, it doesn't move down just yet. We were premature. All right. It did move down a little bit, but then the slope of the premium starts to go up again. Okay. Now, if we came to this point here, we've got a little higher bar on the premium right there. Very next bar is below, so nothing here to be overly concerned with based on the raw read of the premium. Premium goes up, but then boom, we get that bar on the premium, which is much higher. Okay, much higher. It's not a higher high. Okay, it's not like this bar over here. All right, so is this one of our proverbial naked bars? Yeah, it is. This is the definition of a naked bar. We can expect we're going back. Okay, we are going back. Now, we talked about getting into a short trade here. There's nothing here that's telling me to get out of that trade because this is setting us up that we're saying we should be going down here. Now we pop up just a little bit higher. Very next bar is divergent. I'm already in this trade. I've got to read this and say, what should I be getting out of this? All right. That bar is scary. That bar is saying, yeah, we're going to go back up here. It's a naked bar. It's a relative new high here. All right. Let's just check this to be sure. I want to rerun those numbers after 10:33 just so I can see. Yeah, let's just do it this way. Yeah, that's a higher high. It's higher than these bars. So yeah, we're going to go back up all right. But the premium over here was saying, we're ready to go down. And when that occurs, I mean, look at the divergence here. This on the indicator compared to this, much weaker. There's divergence here on the indicator. There's huge divergence here. This doesn't even make it to the zero line. And this is all below the zero line when all of that happens. So all of this is telling me, yeah, we're coming down. And we're coming down right now. And boom, down she goes. How far down? Okay. New low on the premium. Here. Lower low, lower low. Now, we're coming down, but how far down? Nothing on the premium tells us how far down we're going to go, at least not yet. So if we're in this short, we're now looking for some indication that the market's going to go back up. We have that as a target for the move back up. What we should see happening as we go down. One thing that will help us to see whether or not we're at a pivot point is whether we're getting any new lows on the premium. Now, since that bar here, we have no new lows. Okay, the market went lower as the premium predicted. It's continuing to go low. But are we getting lower lows? Ultimately, are all of these lows getting to be lower lows? Let's recalculate again right at around here. And I'm using this as an example because it's now after this particular low. So I just want to read what's happening in here. I can see it. I don't have to put the indicator on it. But for those of you that are just working with this for the first time, we're just going to put, we're going to read this from right here. And the reason I'm reading it from right here is because I know we went lower. I just want to know if the premium is going lower. So I'm going to read this at 11:20. Just going to go in here and change this to 11:20. All right. Hit lower lows here. Market went a little bit lower and then became divergent. Okay, so you notice what we were saying here. Lower low on the premium, lower low on the Spoos, higher low on the premium. Okay, so right in here, all right, we see some divergence. Okay, we're not getting lower low on the premium. So that could very well be as far down as this is going. What we don't see, however, are higher highs on the premium. Okay? So what we're going to do again, just to show you what I mean, we don't have any higher highs here, but we do. I mean, that obviously is a higher high relative to this move. So that is a target. But what about right in here? We should be getting higher highs on the premium in here in order to feel that this low is going to work. So do we see that happen? All right. Let's check from this pivot point right here at 11:19. Just going to go in here, change the time. Higher high here, then divergence. Higher high again here. All right? But that's after the low. So there wasn't really anything that happened here to give me real strong confidence in advance that I should take a trade here. We were divergent. The indicators suggested that we could get in here. All right. But now the premium is confirming after the fact. So if you got in a long trade here based on the indicators, all right, be aware that the setup isn't as strong as it would be had we had a higher high on the premium, say right in here. If we had a higher high right in there, that would be, that would be real predictive. But it happened over here. And now you see we've got a little higher high on the Spoos, but the premium is not confirming that. So this could come down. You go long here, tight stop. Tight stop. Could be yet coming down. So now we're just going to wait. We got to wait to see what's going to happen here. We might, this might have been the right time to go long again, but there's a few things here that I see which don't really make that as clear as it might. If, for example, no, that still doesn't help us any, because that bar on the premium here, that little high did result in the market going higher, yet there was no new high on the premium. The indicators are dropping off. dropping off, dropping off. So a long trade in here, really got to be careful. So let's just now give this a few minutes and see what happens. Just as a commentary, look at this high here. Market moved up a little higher, moved up a little higher still, no new high. Okay, no new high. So we call that divergent. And that divergence generally results in the market pulling back. If you're in a long trade here, gotta be cautious. We should continue to get new highs, and that's just not happening, at least not on that bar, and it doesn't always happen exactly on that bar. But since it didn't, and just look at your indicators here, boom, here, lower high, much lower high here. Indicators are indicating a drop, which in fact occurred. So this low is still questionable. Give it some more time. Just to make another observation of how the premium can help us. Look at the low of the premium at this time. Okay, low of the premium at that time was right there at -606. If we go lower than that, we could be in trouble. To help us to read that, again, I'm going to reset the time. I'm going to read the lows from 1136. Okay, that's as low as we went. We haven't gone lower. If we do, okay, and no doubt we will, but if we do, and we're really close to the price here, we could get stopped out. If, on the other hand, the market continues to move higher and then drops a little lower, then we've got room to work with. But if we're real close to this price and the premium drops below this level right in here, we could be in trouble. So again, we just let it ride until we see clear reason to be concerned. Two things we're going to watch for. We need to start getting higher highs on the premium again. Failing that raises serious doubts about whether the market's going to move higher. Or lower lows again. That too could indicate trouble for the move up. Now we just play a waiting game. Just a little more information. We don't put a lot of credibility into what I'm about to say, but sometimes it works pretty well. Measure how much time it takes to go from one new high to the next on the premium. That can give you some barometer as to when you can expect the next time. So from here, 11:22 to 11:41, about 20 minutes. So right around 12 o'clock, this should be moving into a new high. That 20-minute to 25-minute interval is reasonably predictable. So whether it's you're charting the highs or the lows, you do the same thing. Look at this low here, right? That occurred at 10:35. We didn't get another new low until 11:12. It's almost 45 minutes. So from 11:12, 45 minutes later, we could get another low on the premium. So at about the same time that we should be expecting a new high, we could instead be getting a new low on the premium based on that time frame. And we've got just a few minutes before the top of the hour. And it looks like it's going to be moving into a new high. And hopefully so, because that's the direction we're trying to trade. We're now one tick higher than the previous high, but not on a new high on the premium. Not good. Not good. All right, so you hear my narrative. The indicators are moving up, and that's all fine and well, but they're also losing strength. I mean, this thing is not way up here anymore. It's still down here. And a good rally up would mean that the amplitude of this indicator should be much higher, and it's not. In fact, we're getting lower highs here, not higher highs. So that's definitely in jeopardy. Got a little lower low here on the premium. I'd expect this to drop back down to 41.50, maybe drop to 41.25, and then try the move again. We're not out of the trade because that's still our target, but for right now, it's not looking real positive. So we're going to put this on pause and just let it play out, and then we'll come back later on in the day and we'll discuss what happened. But just to recap, the market is long. Okay, we expect that we will be going back up to this high later on during the day. We had a nice pullback. We could see the low here was potentially a good time to get in based on the premium. Indicators agreed. That's our target. But we didn't see all of the makeup of a good entry here. It was semi-good. I mean, we were divergent. We didn't get all of the data that would normally suggest that that was a spectacular setup. It wasn't bad, but it wasn't as good as I'd like it to be. But it's worked so far. And what's unfortunate, though, is we're not getting any confirmation that this is moving up higher right now. And in fact, we're not seeing any evidence of that. Again, we tested that high. High of the premium was even lower. So that doesn't bode well for this moving up. What would need to take place is we need to get a new high, well, yeah, it would need to go higher than -509 for me to have any real confidence that this is going to be sustained. And right now, that's not happening. So am I concerned about this coming back down? Yes, I am. In the trade here, tie stop. Would I take profits? Probably not. I'm going to either get stopped out or we're going to make it. But right now, it doesn't look good. So we'll come back and we'll narrate after we see more activity on the market. So we're going to put this on pause We've got other things we need to care for, so we're going to go take care of them. And we may not be coming back until toward the close of the day to recap on our video. But we're right now, we're at a pause, and we'll come back quite a bit later, and we'll discuss what happened. All right, well, let's just comment on this. Look at our indicators here. We're not getting any lower lows, and there's divergence here on the indicators, so that little move up was good, but notice where the premium didn't go. All right, 42.25, 42.50, but the high of the premium is not as high as we would like to see it. We had divergence here on this faster indicator. Everything else was sloping up. So yeah, we expect a little bit of a move there, but the confirmation just isn't there. And it's now been quite some time since we've had a new high on the premium. So that, if this is going to work, it's got to happen quickly here. It's got to happen very soon. Okay, well, we are getting higher highs on the Spoos here. We're not getting what we need as confirmation on the premium just yet, but it does look like we're moving at least in the right direction. So mind you that 44 is the target, at least for the moment. Normally we would want to see the premium move above the threshold line. If it remains below, that oftentimes results in some deep concerns about the likelihood that the rally will continue, as opposed to it beginning to sell off or at least pull back. And every time it pulls back, we've got that much more difficulty. So we're at 43. The target there was 44, and it looks like we're about to hit it. So, all right. So you can see, hopefully, the reason behind why we were talking about this level right in here. That worked out quite well, and it looks like we're going to meet our target. So we'll conclude this video after the close. We'll come back and recap what happened between now and the close. And we're based on pattern of the day. We don't talk about that too much, but pattern of the day indicates to me that the high of the day should occur early afternoon, perhaps, let's see, yeah, we should all right, within approximately an hour and a half from now, we should be running into our high of the day. Okay, so we've got a little ways to go before that high is achieved, but the pattern suggests that we should be hitting a new high sometime prior to 1:30 Central Standard Time. So between pretty close to 1:30, we would expect the new high for the day. All right, so we'll come back and recap that after the close, but right now we're going to conclude our video for the moment, and we'll come back a little later. All right, let's go ahead and continue on in our discussion and just run through what took place in the afternoon. We were targeting the 1544 level based on the previous high of the premium. And as we continued to just inch up here, what we were finding is that the premium just wasn't coming above the threshold level. but we're getting very close, and using the predictive value of the premium, we're pretty sure that's going to get hit. We didn't see anything too disconcerting until right here. As the premium came down to a relative new low, and you'll hear us use that expression, relative new low. In other words, relative to the time when we most recently reset the premium, okay? So this bar is not divergent. It is on that basis, it is a naked bar, and we can expect, let me use a trend line here instead. We can expect a retracement back down to this level, okay, based on that bar on the premium. So we're inching up, and if that's our target, okay, and we have this happen on the premium, you know, it may not be worth it to risk dropping a point to make a tick. Okay, we have every reason to believe that's going to happen, but we now have information that's saying we're coming back down. So taking a profit up here, or just taking the risk because the timing isn't quite right for the high of the day yet. Finally, we do hit that level. Okay. Now what we want to do is just make sure that we don't have to reset our expectations. So what I'm going to do is go back here, and we reset it at 1136. Let's just take this just so that we can see clearly. We'll just take it out 1,000 bars just to see if there's anything in here that's happening. We're not getting any lower lows than we did here. We finally run up a little bit. We still haven't managed to get much above that threshold line. But because we have it, if we had held the trade, at this point in time, we've accomplished what we sought out to do. And there's no real reason to hold on to this trade any longer. Okay. Now, let's supposing we take our profits and we decide we're going to continue to trade. What do we know now? We've got a lower low on the premium here. We've got a lower low on the premium here. That resets where we expect the low to go, and it goes lower than that bar on the very next bar. The predictive value of the premium has been achieved. We can't tell anything more here. There was no new high on the premium at this point in time. Not a real new high. I mean, this is a relative new high, but I wouldn't consider that to be particularly predictive that it'll go higher, because that bar just isn't much above the threshold. That's really not much above the threshold. It could go back up there and test it. As far as I'm concerned, we're out for the day. There's nothing here. Let's go ahead and see what else takes place. We get a nice rally up further. This thing moves another, let's see, where is that? I was at, let's just say 44.5, and she takes it all the way up to 45.75. Now we've got a new high on the premium here. So now I'd say, yeah, we're going higher, but trying to get into the trade at this point is really quite late. So let's see if there's anything else here that, oh, it continues to move up quite nicely. Right, and there's nothing in particular that's giving us a heads up as to what's going to happen here, other than the fact that we don't have a new high. Oh, as a matter of fact, yes, we do. All right, new high on the premium here. No new high here. Above threshold. Equal high here. Barely into the threshold line. Now we get even higher, and we are way below the threshold. Even higher and still below the threshold. Yeah, that would suggest there's no strength at all in this move. Could you short it? Sure, you could short it, but there's no place that we can see based on the premium as to where this is going to come down to. We don't have any naked bars to give us a prediction of where this is going to drop to. Shorting it could make some sense. Let's just look at our indicators here. All right, we drop down to this point here. We're inching back up, equal lows. We're above the zero line in both these. We're slanting up. Oops, slanting up. We could have gone long there, maybe hoping to get something out of it. But again, we didn't know where this was headed. Now that we do and we have no more strength, you can see we're beginning to slope down here, as well as here, as well as here. There's a short coming. We don't know how much it's going to drop based on the premium. We don't have that information. But it comes right back down to that 44 level. So there was a late afternoon short possible based on that information. Here we are at the close, right here. And again, keep in mind the premium is no longer accurate because we're after the closing bell and there's no cash index. So one last trade of the day maybe could have made some money if you were so inclined to still play the game. All right, that's our video for today. We invite you to come take a demo. Our indicators come with training. They come with a PowerPoint. They come with videos. Many of our videos we post right here on YouTube. But by learning how to read this, you will make much more predictable decisions, much more profitable trades by knowing how to read this indicator that we call the premium. It's fantastic. There's only a couple of places in the country that you can learn how to do this, and we're half the cost of our competitors. So please give us a call if you're interested in learning. We'd be happy to teach you. This is Rod Kusin and Spooman for Risk.